And they don't understand the damn economy because people never run a business or had sex for that matter, all these economists. They don't understand what's going on. They made a mistake.
Hey guys, welcome back to Library of Wealth. Today we have Harry Dent on the coming economic depression and how that will affect all markets this year. Dent says that we will have 3 waves of a market crash, the first being the post-crash bounce. This means that people are starting to believe everything is over now, but we're actually still in a recession. Dent says the recession actually began back in 2009, which was surprisingly more of a depressionary period. He says that a bubble of that size should have created much deeper and longer consequences, but notes that even with stimulus, the Fed overreacted about the economic shutdown, which was a massive mistake, and forced them to tighten. Let's listen to this interview with Harry Dent as he forecasts the downfall of the financial market and the economy. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Okay, a crash like this, you'll see 3 waves of crash. What we've seen is the first wave down. And of course, that's the most important one because if it's 10 or 20%, then it may not be the beginning of a larger crash. We can always go to new highs. This one was 35% on the NASDAQ, 25% on the S&P. So that 30% plus range qualifies it as yes. This looks like the first crash, which means now we're in the bounce from that crash where everybody's gonna say, oh, it's over, and one good jobs report, okay? You know, how much is job stuff? We're still catching up from COVID and stuff. So we are in a recession. All the signs point towards a recession. Everybody says it's gonna be shallow. That's what the experts say every time we have a recession. Here's the truth about this thing. This recession, it started in 2008-9, which is really more a depressionary period from such a bubble of such a magnitude. That should have been deeper and longer. That crash should have gone into mid-2010 and been a lot deeper. Stocks should have been down 80%, not 50-some%. So they blew us out of that. Now, despite stimulus, they overreacted to COVID, which was a huge mistake because now they have to tighten because they overreacted to COVID, and COVID is a temporary crisis by definition, not a long-term crisis. But the economy is getting weak again. Now I'm just let people figure something out for yourself real quick. Let me tell you what happened during COVID. $5.1 trillion in fiscal stimulus and $5 trillion in monetary stimulus in 2 years, almost half of GDP, and we're already falling into a recession again despite that.
Dent believes that we're currently in the weakest part of the biggest demographic downturn in financial history. He says that this downturn must eliminate all major debts in the system, but the economy will never be able to clear out the overflow of overvalued financial assets. He says that to return from this, all assets need to deflate back to normal. People need to grasp that this is the largest financial asset bubble ever.
It shows what I'm saying. The economy is weak because the baby boom peaked back in 2007. We're in the weakest part of that downturn demographically, the biggest demographic downturn in history, until about 2024, still a year and a half from now before we start to recover. So this downturn is going to have to be deep to wash out all the debt and all the bubble stuff. We can't just come roaring out of this and say we're over it. This is the first wave down. We may be close to the end of this bounce. So consider, here's how it goes. A first wave crash down, 2-wave counter trend, okay? Retraced 40 to 50%. We retraced about 40% now, so this could be over soon. Then you get the next wave down. That's called the 3 wave. That should be the same size and length of this wave or more. So we're probably going to see another wave down from sometime this month into January of next year. And if the market's down into January 2023, just the January indicator would tell you the whole year is going to be down. So that'd be the next wave. Then you'll get a bounce, and then the final wave will come into late 2023 or early 2024. That's what you should expect after a bubble of this magnitude, especially one that's been stretched and stretched and stretched. The economy's never been able to wash out all this excess. 600 trillion of financial assets that are more overvalued than any time in history. Frankly, and I show this in my newsletter, we've been telling our subscribers is, we have $600 trillion now in financial assets. 6.5 times GDP globally, and that normally would be 2 times GDP in normal times. So this bubble has to unwind. That means hundreds of trillions of dollars of financial assets. What is that? Real estate, stocks, bonds, commodities, gold included in there, all have to deflate back down to normal so we can come out of this. And we have to flush out bad debts, the highest debt ratios. Can't even compare the debt ratios globally and domestically to the roaring 20s and past bubbles like this. So people need to understand, this is the greatest financial asset bubble in history. There is no soft landing to this, period. There is no magic way to get out of it. Now that this thing is cracked this far, I've been telling our subscribers for months and years now, it'll come to a point where they keep stimulating, but it's not enough and the economy breaks down anyway. We are in the beginning phases of that, and it's very, very likely this is going to continue. So don't listen to all of the clueless economists that never thought this could happen in the first place and saying, well, this will be a mild recession and the worst is over. I am telling you, it is not. This is once in a lifetime. This is not another recession. It's not another 20% stock crash. This is going to be the biggest crash you have seen in your lifetime, more comparable to the 30s, not quite that bad, and that you will see for the rest of your lifetime. That's what I am saying. We already peaked in January 4th on the S&P and November 22nd on the NASDAQ. I see 86% to get to the bottom of the S&P a few years from now and 92% for the NASDAQ. So yes, in that 80 to 90% range. Again, you have to go back all the way to 1929 to 32 when we saw an 89% crash. What changed in the last year? What changed? Just think, what's the one thing in the economy that suddenly changed? Inflation went from 1% to 9.1% and 0 to 60. That's what kicked their butts, okay? That's what stopped this thing. How do you think you can print more money and not create inflation? The only reason it didn't otherwise, the economy was weak and the demographics were slowing, and that kept a lid of inflation. What I'm saying is they made, since they don't know what they're doing, and they don't understand the damn economy, because people never run a business or had sex for that matter, all these economists, they don't understand what's going on. They made a mistake overreacting to COVID, and now that has called their hand, forced them to tighten, and if they turn around too quick on tightening, it's going to send a signal that the economy is even weaker than anybody thinks. It's the worst commodity because they're going to go, mark my words on this, and me if I'm wrong. Next few years, housing in the United States is going to go down 50%. You know what? People said that couldn't happen. It already went down 34%, and I predicted that, okay? Already went down 34%, more than in the Great Depression, not because the economy was worse than the Great Depression, nowhere near that. It's because we didn't have a bubble back then. You couldn't buy a house with no money down, with damn near zero rates and speculate like you could. In the roaring 20s, in that bubble boom, a house you had to put 50% down, and the longest mortgage you could get is 5 years with a balloon payment. That's what's different now. So housing had a big crash, but of course they pushed us out of it. The next crash, mark my words, 50%. Most people who got a mortgage in the last decade are going to be underwater. Banks are going to be underwater on loans, and then this thing's going to be a big mess, and they're finally going to have to write down loans.
Dent says that inflation is the only thing that has dramatically increased in the current economy. The Fed mistakenly believed they could produce more money without creating any inflation. The only reason inflation didn't happen was that demographics were slowing and the economy was extremely weak. Dent strongly believes that the housing market is the worst economy because it's already decreased by 34%. Housing has already had a gigantic crash, but we've been pushed through. Dent firmly believes that the next crash will cause many who are paying a mortgage to go bankrupt immediately. What do you guys think about Harry Dent's opinion on the economic crash and the failing housing market? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.